Warren Buffett, the well-known billionaire investor, was born in 1930. That means he's invested through more than 6 major market downturns and many minor ups and downs in his 92 years. But Buffett hasn't just survived them. He's come out on top as one of the world's most respected and well-known investors. But have you ever felt overwhelmed by the sheer volume of information about Warren Buffett out there? With countless articles, dozens of books, a solid 56 annual shareholder letters, and endless hours of press conferences, it's no wonder you're struggling to find time to digest it all, let alone apply the wisdom from the Oracle of Omaha to your own life. But don't worry, we've got you covered. Hey guys, it's Bruce. Welcome back to Money Maps, where it's our job to help you chart your financial success with expert guidance and practical steps from the best minds in money. In today's video, we've done the heavy lifting for you. We've sifted through the mountain of knowledge, handpicked 3 crucial takeaways, and crafted 12 practical steps you can implement right away to tap into Buffett's legendary wisdom. So get ready, smash that like button, and let's jump right in. Buffett's strategy number 1, focusing on long-term growth. Kicking off with a broader perspective, in today's world of 24-hour news cycles and real-time stock price updates on our smartphones, it's all too easy to lose sight of the bigger picture. Buffett is a big believer in the power of long-term investing. This means he looks for stocks that are undervalued momentarily and holds on to them for a long time. By doing this, he's able to ride out the ups and downs of the market and make a profit when the economy recovers. He targets companies with a sustainable competitive edge and a solid growth history, rather than those experiencing short-term stock price fluctuation. He focuses on years rather than days and minutes. In one of his letters to Berkshire Hathaway shareholders, Buffett said, "If you aren't willing to own a stock for 10 years, don't even think about owning it for 10 minutes." That's a powerful reminder to focus on companies with strong businesses that can survive economic challenges and come out stronger in the long run. He prefers investing in businesses he understands and which have a clear path to enduring success, famously stating, "Our favorite holding period is forever." Buffett's long-term investment approach allows for compounded returns over time. Investments in companies like Amazon, Apple, Microsoft, and Oracle demonstrate his belief in their strong long-term growth prospects. Here's how you can apply this principle. 1. Adopt a long-term mindset. Rather than chasing short-term gains and quick wins, look for companies that have a sustainable competitive advantage and a history or track record of consistent growth. 2. Understand the business. Choose companies with products or services you understand and believe in. This will help you stay confident in your investments during market fluctuations and inevitable ups and downs. 3. Tune out market noise. Don't let daily market movements and headlines influence your long-term investment decisions. Stick to your plan and stay patient. Consider turning off market notifications on your phone. If you're in for the long term, do you need to check the stock price every day at lunch? 4. Reinvest dividends. If your stocks pay dividends, reinvest them to take advantage of compounding returns over the long term. Buffett's strategy number 2. Maintaining a diversified portfolio. This one comes as a given. Buffett's well-known approach involves maintaining a diversified portfolio. By allocating investments across various industries and sectors, he spreads risk and minimizes the influence of any single company's performance on his overall portfolio. Throughout the years, Buffett has preserved a diversified portfolio, investing in healthcare, telecommunications, and other industries in addition to his undervalued stock holdings and companies with long-term growth potential. 1. Diversify your investments. Distribute your funds across various industries, sectors, and asset types to help mitigate risk and shield your portfolio from market fluctuations. 2. Look into index funds or ETFs. These investment instruments offer immediate diversification by mirroring a broad market index or a particular sector. 3. Rebalance periodically. Routinely assess your portfolio and make necessary adjustments to confirm that your investments remain in line with your risk appetite and objectives. 4. Keep learning and stay educated. Consistently expand your knowledge about new industries, sectors, and investment opportunities to stay up to date and make more informed decisions. Bonus Buffett Strategy 2.5. Keep cash reserves. Warren Buffett is known for always having a lot of cash available. Why? Because when the economy is struggling, many people sell their investments, causing prices to drop. Buffett sees these times as chances to buy good companies at cheap prices. By having a lot of cash ready, he can take advantage of these opportunities when they come up. Buffett has talked about the importance of having cash in different interviews and letters. In a 2018 interview, he said, "We always want to be prepared for the 1,000-year flood. That doesn't mean it will happen, but if it does, we're ready." Buffett likes to be conservative with how he manages Berkshire Hathaway's money, making sure the company can invest even during economic crises. Buffett's strategy number 3, investing in undervalued stocks. Buffett prioritizes undervalued stocks, seeking companies with robust fundamentals that trade below their intrinsic value. He famously stated, "Whether we're talking about socks or stocks, I like buying quality merchandise when it is marked down." By concentrating on companies with long-term potential, Buffett invests in those with competitive advantages such as a renowned brand, devoted customers, or innovative technology or products. Additionally, he focuses on firms with a history of profitability and a capable management team. During the recession, Buffett has invested in undervalued stocks like Bank of America, American Express, and Coca-Cola, as well as energy companies like Chevron and Occidental Petroleum, which have suffered due to the pandemic. So what can you do about it? Here are 4 ways you can apply this strategy. 1. Learn the basics of stock valuation. Start by understanding price-to-earnings ratios, price-to-book ratios, and dividend yields. You can find free resources online to help you learn these concepts. 2. Research companies. Look for businesses with strong fundamentals, such as low debt, consistent earnings growth, and a competitive edge in their industry. Websites like Yahoo Finance and Seeking Alpha offer valuable information and analysis. 3. Use a stock screener. Websites like FinViz or Zacks offer free stock screeners that allow you to filter stocks based on criteria like valuation ratios, industry, and market cap. 4. Be patient. Just like Buffett, wait for the right opportunity to buy undervalued stocks. It's better to invest in a few great companies at a discount than to jump on every opportunity that comes along. And there you have it. We've just explored the 3 fundamental strategies of Warren Buffett, along with practical ways for you to incorporate them into your personal investment endeavors. 92 years given to you in a few minutes. These strategies show his commitment to long-term investing and a strong focus on understanding the basics. By putting money into undervalued stocks, aiming for long-term growth, and having a varied portfolio, Buffett has been able to grow his wealth even during rough market conditions. His success proves that having a long-term perspective and a disciplined approach to investing is important. By paying attention to the core features of companies and sticking to his investing rules, he has achieved amazing returns over time. As we deal with the ongoing challenges of the past few years and the possibility of a financial downturn, Buffett's techniques offer valuable lessons for investors trying to navigate these difficult times. Following his approach and investing in top-notch companies with bright long-term futures can help you achieve lasting success. Remember, the secret to success is patience, discipline, and a long-term mindset. Thank you for watching. If you've liked these ideas, please give us a thumbs up, share with your friends, and subscribe to our channel for more expert guidance and practical steps from the best minds in money.